Although it appears unexpected, did we have any indication that this might happen, David? Was this something Volkswagen was always testing? Rivian was obviously out there seeking money, and they needed money, but we had no indication that it was coming. They've been spending money, and it didn't appear likely that they would achieve cash flow positive status very soon, considering their poor output levels. They therefore required funds. They may have had other options for financial partners, but this is very beneficial to both them and Volkswagen. In addition, it benefits Rivian because they now have a partner, a large automaker, that has engineering, production, and a large parts bin that they can access for parts that aren't EV specific. Thus, they could be able to reduce their expenses much more quickly than they could if they were to sell 50,000 cars a year on their own. What about Volkswagen? I thought Volkswagen had its own electric vehicles, so why is it doing this? They have their Scout unit, which is meant to produce electric trucks, but they may also be able to use Rivian's SUV and pickup. If you have been following the EV scene, you are aware that it is becoming hotter, and that Tesla is at the forefront of it all. We'll examine the most recent market developments, the substantial investments made by big automakers like Volkswagen in rivals like Rivian, and how these actions are influencing the sector today. We're delving deeply into the strategies underlying these investments and their implications for Tesla's future, not simply the statistics. Why would this be the ideal moment to buy more Tesla stock? What distinguishes Tesla in the face of intensifying competition? We'll look into these and other issues, giving you thorough information and analysis that may help you make better investing choices. So fasten your seatbelts and prepare yourself for a thorough analysis of the reasons why Tesla's stock might be about to soar. Make sure to press that subscribe button and ring the bell for notifications on our latest videos. You won't want to miss out on the vital information we've got set up right here on Tesla Stock News. The focus is on the electric vehicle sector, where Volkswagen's large investment in Rivian, a prominent rival of Tesla, is drawing attention. Given that Rivian is the one getting the financial boost, you may be wondering why Tesla is the center of attention. This is why it's important. Rivian has been spending a lot of money. In the last quarter alone, they spent an incredible $1.5 billion. Without Volkswagen's financial boost, Rivian's future looked bleak, with the company perhaps going bankrupt by the end of the year. Beyond merely keeping Rivian afloat, Volkswagen's decision to spend up to $5 billion in the company says a lot about the competitive environment in the U.S. electric vehicle market, where Tesla is the main competitor. One could argue that Volkswagen's strategic decision was an attempt to counteract Tesla's increasing power. Let's pause to consider that. Given their low prices, Chinese electric cars may take the lead in the worldwide market, if not for severe import laws and fines. This scenario depicts a very competitive market in which established manufacturers are making a valiant effort to catch up. Furthermore, the electric vehicle market extends far beyond the engineering and manufacture of cars. It involves enormous political power and deeply rooted consumer preferences. High-profile comments from powerful persons, such as former President Donald Trump, have profoundly affected public perception. Trump's criticisms, which frequently highlight alleged disadvantages of EVs like their short range and charging problems, are predicated on outdated EV models and could not fully represent the industry's recent developments. For electric car manufacturers like Tesla, this political involvement has produced a difficult atmosphere. It can cause widespread caution among prospective purchasers when a well-known political figure expresses mistrust, which can impact market sentiment and potentially even investor confidence. Furthermore, these political pronouncements have the power to affect financing priorities and regulatory rules, which are crucial for the development and spread of the EV market in addition to influencing customer choice. Consumer preferences are another important factor that contributes to the complexity. Changes in consumer behavior and attitudes on the feasibility and practicality of EVs are key factors in the transition from conventional gasoline-powered vehicles to electric ones. In order to preserve and improve its market position, Tesla must constantly negotiate these shifting sands of governmental power and consumer views, even in the face of its inventions and market supremacy. Tesla's business environment is made more complex by the interaction of politics and public opinion, which leaves its market sentiment vulnerable to variables other than financial measurements or product performance. As Tesla develops, comprehending and resolving these outside factors becomes just as important as the technological innovations they support. Now think about Rivian's stance. Notwithstanding its financial difficulties, the company has established a place for itself by manufacturing premium cars that are able to connect to Tesla's charging network. Volkswagen's investment may allow Rivian to keep improving its products, which could lead to an increase in its market share through at least 2026. Such developments may be important for anyone who are interested in market dynamics and investing strategies. It is a gripping story of how established automakers are negotiating the transition to electric cars and working with startups like Rivian to challenge Tesla's hegemony. One must consider the future of the electric vehicle sector and how these investments will affect the competitive environment as we watch these calculated actions. The financial community is intently monitoring the actions of big players like Volkswagen as the electric vehicle industry heats up, as the company seems to be strategically hedging its bets on Rivian. Volkswagen is effectively banking on Rivian's success with this strategy, which is similar to placing a call option on the company in case traditional manufacturers have trouble keeping up with the quick adoption of electric vehicles. These actions highlight a more general attitude in the formal auto business. There is a real concern about Tesla's increasing power, particularly as battery prices drop and might further increase Tesla's profitability. Lower borrowing rates provide a lot of potential for the electric vehicle sector, especially for businesses like Tesla. In general, lower interest rates lower borrowing costs, which helps consumers finance expensive purchases like cars and allows businesses like Tesla to invest in growth and innovation. For Tesla, this financial climate may act as a stimulant, giving it the power to quicken development and boost production capacity. This possible interest rate cut could be a game changer for Tesla. It would increase consumer affordability and enable Tesla to finance its ambitious ambitions at a lesser cost, which might increase demand for its cars. In a setting like this, Tesla might have a clear edge over established automakers, who are still making the switch to electric vehicles and are frequently hindered by the delayed adoption of current infrastructure and technology. Additionally, a spike in the value of Tesla's shares may result from the industry stabilizing after the adjustment to reduced financing rates. Tesla's market value may rise as a result of investors realizing the improved profitability made possible by lower finance costs and higher sales volume. This heightened investor confidence, combined with Tesla's robust product selection and demonstrated market leadership, could place it substantially ahead of traditional automotive businesses. Market observers are also keeping a careful eye on Rivian's financial situation, as the company is a direct rival and has received significant investments from Volkswagen. Rivian's continuous financial troubles, which are sometimes called a fire pit of cash burn, highlight the challenges faced by newcomers to the electric vehicle market. Notwithstanding these difficulties, Rivian plays a critical part in Volkswagen's plan to challenge Tesla's hegemony. Volkswagen's backing shows that the company is strategically placing bets on several fronts in the EV market, underscoring the fierce competition Tesla faces. The interaction between up-and-coming rivals like Rivian and well-established titans like Tesla highlights the competitive tactics and broader market dynamics. The capacity of Tesla to take advantage of advantageous economic conditions and overcome competitive obstacles will be crucial in establishing its long-term position in the global automobile market as it innovates and broadens its reach. This complicated situation is further complicated by the political environment, namely the public positions of individuals such as Donald Trump opposing electric vehicles, in contrast to Elon Musk's calculated moves, including his contacts with Trump. Speculation airing also extends to technological technique.